Hey everyone, welcome. How's it going? It is 1 p.m. We just got the closing bell for Monday, January 22nd. Let's go ahead and take a look at what happened in the markets. It was a pretty quiet day. It was, at least in terms of excitement compared to the days that we've been having, it was pretty muted, pretty much just watching paint dry all day. We just kind of chopped sideways. We opened, we did get a little bit of excitement right in the first hour or first hour, half hour, I should say. We did bust above that purple line we were talking about, bounce, and then react very strongly to the upside, but it didn't last very long. So that would have been a very quick little day trade right there. It looks like maybe over the 10 or 15 minutes, but otherwise, not too much going on. We reacted to the second purple line for most of the day, and we did get a little bit below it, but for the most part, all we did was chop sideways between this purple line and the VWAP. So very muted action. In terms of the daily, we can see that we're up 0.23%. Nothing to get too excited about. It's just up a baby amount. It is a red bar, but it is still moving upwards steadily and on track to hit that 490 level if this upward movement continues by the end of the month. So in a week and a half or so, it still looks like we could possibly hit that psychological resistance at that 490 level. If you look at QQQ, very similar. We are at our +3 ATR now in the QQQ. So it is time to start being a little bit more careful in terms of the tech stocks. And then in the overall market, we're not quite there yet. We're at basically our +2 ATR. It's probably a little difficult to see, but we're right there, right on top of our green line right there. That's our +2 ATR. So there's still a little bit more space for the SPY. QQQ, we are right at that +3 ATR, but we could stay there for a few days. It doesn't mean that we have to pull back immediately. So we want to watch that very carefully, and let's take a look at our small caps. Our small caps are recovering. We are not anywhere near our all-time highs. So when we see a pullback and a reversal, what we really want to watch out for is the day that small cap stocks start leading the larger indices. So we haven't had that yet. We're not going to get super bullish until that happens. So we're still looking for a pullback and a rearrangement of these indices. And when small caps start leading, that's going to be our signal to really get bullish in the market. I think that's about, let's take a look at our TLT, our bonds. So we did come down on Friday below the MA 150 and the MA 50. Today we bounced back up above the MA 50, but we got stopped at the EMA 8 and we came right back down right on top of that MA 50. So bonds we're going to have to watch. We're going to see, is this going to actually bounce and recover, or is it going to start heading back down? This is a lot less definitive. It's a lot harder to say. If we go just by the trend, we would favor that the bonds would continue to move downwards. And actually, if we go by the FedWatch tool in terms of the expectation of what the Fed is going to do, let's just see that March expiration. It should be even, yeah, we're only at 41% now, 41.5%. So on Friday, we were looking at 47.2%. A month ago, we were looking at 87, 89, 88% right here. So this is rapidly moving downwards like we expected, but it just hasn't had a huge impact on the equities markets. So the equities markets are still strong, and we're going to play to that strength, but we're going to be careful waiting for that moment that we get that pullback. It will happen eventually. We just don't know the exact timing of it. It does feel like more and more signs pointing towards somewhat soon. But again, we don't want to get ahead of ourselves. We don't want to start trading that pullback until we actually get downward movement, definitive downward movement into that pullback. The pullback's not going to be a 1 or 2 day thing. It's not going to be like this. 1, 2, 3, 4 days. So that's not what we're looking for. We're looking for a deep pullback, maybe even a correction that lasts a couple of weeks. So there'll be plenty of time to catch it when it actually happens. Other than that, let's take a look at the sectors. Let's see which sectors performed today. Because I somehow, if it's not tech, then we're starting to see a shift in the markets. So that would be interesting to note. Okay, and it wasn't tech. Looks like attention was on retail today. That is interesting. And a little bit of home builders. Home builders, we would expect that with interest rate sensitivity. So the bonds did bump upwards. So home builders bumping upwards isn't too surprising. Same with real estate. Okay, but retail is a little bit surprising. Let's see if we got any major retailers that reported today. I'm not seeing any so far. So if it's retail and it's not earnings related, then that would be really interesting. It would actually be a pretty positive sign. And so far, I'm not seeing any specifically retail. We've seen some discretionary, consumer discretionary stuff, but nothing specifically retail. So that's really interesting that we went into retailers. Let's take a look at XRT. Yes, very strong movement. So this is a definitive bounce, movement upwards, 1, 2, 3 days of higher closes and a sharper movement above that EMA 20. That makes retail look pretty strong. Let's look at specific stocks within the retail sector. Carvana, that's interesting. Let's see about the change today. Yeah, Carvana, Foot Locker, Leslie's, Dick's Sporting Goods. Let's take a quick look at these first 3 or 4. Yeah, not earnings related. Carvana doing a nice little bounce right here, just like we saw in XRT. Looks almost exactly like it. Leslie, what was the ticker for Leslie's? LESL. Yeah, this one's a little bit more muted movement, but still looking very much like XRT. This one's also below its May 200. That's a little interesting, but performing very well. And then we had Foot Locker, and I think same thing. Yeah, this is a little bit more extreme downward movement, but the last 4 days looks very much like XRT. And then DKS. Dick's is super strong, stronger than retail. So out of all the ones that we just saw, Dick's was the strongest. This is parabolic stretching from a couple weeks back. So this is really strong movement. This is looking really good for retail. That just gives us a little bit more confidence in this upward movement in the overall indices, and that it's looking a little bit more likely that we are actually going to hit 490. So on Friday, we said we had this big day. We wanted to see an up day today and an up day tomorrow to see this trend and potentially go into 490. Well, we did get that update today. It is a red bar, but we did close higher, 0.23. So we gapped up and then we closed a little bit smaller, a little bit lower than the gap. So we closed the gap a tiny bit, but we're still up. And tomorrow, if we're still up and we have that focus in retail, like today was retail, if tomorrow it continues to be retail or financials or something other than tech, then we're starting to get breadth in the market. And that is a good sign that we could hit at the very least that 490 level. So we want to watch that very carefully. Again, even though you hear me talking about a pullback, what I want you to actually hear is that we are in a uptrend. And if we're in an uptrend, we should be long the market. And so we don't want to get ahead of ourselves. We don't want to get into the game of predicting of when that pullback is going to happen. We just want to know that the risk of the pullback is increasing, and so that we want to make sure that we're hedged and we're balanced. But overall, our portfolios and our positions should still lean towards the positive side because that's the trend. That's the trend that we're moving in. That's the direction that we're moving in. It's kind of like saying, I'm driving down the road and I know that I have to make a U-turn. Well, as I'm preparing to make that U-turn, I just slow down a little bit. I don't stop and turn around right away. I make the U-turn at the appropriate place. I don't U-turn exactly where I am. So we just want to know that that U-turn is coming up so that we can slow down and prepare ourselves a little, not just about face right where we're standing. So that is going to be it for today. We'll see how tomorrow develops. We'll see if we continue that bullish bias in the morning, and then we'll take it from there. All right. Have a wonderful day, you guys.